So you know what we got to do? We got to talk about these bulls and what happens when they burst out of the pen with you on top of them. Bull number one sees a vaccine right around the corner and more help from the government on the way. This nirvana for the market, right? And everything moves up, aside from the COVID stocks. Bull number two has vaccine in its sights, but no stimulus package. That produces strength in the growth stocks, but not much more. Bull number three, no vaccine news, but we get meaningful stimulus bill. That allows small businesses to survive without doing much to help traditional growth stocks. Finally, bull number four, no vaccine news whatsoever and no federal assistance whatsoever. You might think that sounds like a bear. But as we saw today, the Cramer COVID-19 stocks can still lead us higher. All by about $15 trillion worth. Of course, there's always a twist. Today, the State Department, in its infinite wisdom, lifted all travel bans, which is kind of funny when you remember that most countries now have travel bans on us. I have a business in Italy, and they won't let me go see it because America is one of the worst outbreaks in the world. Wasn't Italy the worst at one time? We make olive oil. I call it Jim's None Better, but only on this show because my wife doesn't watch. Today, we had the fourth kind of bull market. So what happened? First, the big cap growth stocks, they just went crazy. I mean, it was amazing. Facebook's become a lifeline for small businesses trying to transcend their brick-and-mortar prisons. When your city's locked down or you have vigorously enforced social distancing with those things, you know, it's like you can stand here and then like here and then like here. You ever see that? You look down. All I do is look down. I'm in the store. These retailers have to find another way to apply their wares. Facebook makes that happen, which is why I think it surged 6% today. Instashops, fabulissimo. Why not Etsy? Well, you could argue because no stimulus means people won't have enough money to buy stuff on their platform. Honestly, I think Etsy got slammed because it ran up way too much. We're going to find out later. Salesforce word, of course, is the king of the cloud. It makes large enterprise more efficient, especially when it comes to landing and retaining new clients. Their customers don't need a bailout. They'll be fine. Buy the stock. How about Apple? Now, I've been pushing this stock for years. How many times have I said, own it, don't trade it? Now Apple's finally getting the valuation it deserves because Wall Street starting to realize that the stock's going up based on the lifetime value of its incredibly loyal customers, like a consumer packaged goods play. For years, I've said this stock should have a much higher price-to-earnings multiple, more like that, say, Procter & Gamble. That's a classic razor blade business. Well, yeah, it's because they own Gillette, which is what Apple's become. No wonder the stock keeps surging. It's a wholesale re-rating, as they say on Wall Street. Microsoft rallied too. It's another COVID winner that also might be able to buy TikTok. That's at least the American business for a song, thanks to the U.S. government. I hear the president wants the government to get a cut. That may sound completely ridiculous to you, but honestly, companies that get sweetheart deals from their Uncle Sam really should kick back something to the Treasury. Otherwise, Microsoft's getting a huge handout for free. The president's right. What about Disney? You'd think this would be a vaccine play? We've learned that Disney's a growth stock with a fabulous streaming business and a huge balance sheet that will allow them to wait out the pandemic. They're making a mint from Disney Plus, while the parks, the movie business, and ESPN can all afford to wait until next year for a vaccine.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.